The last year has seen a lot of bad news for the crypto markets. But is everything just as bad as everybody is saying? News headlines like Bitcoin is down 80% since its all-time high is much more exciting than Bitcoin is up 70% since the last halving. Here are 5 key metrics I've been watching that show Bitcoin isn't dying and crypto is far from dead. It's actually thriving if you stand back and look at the big picture. The first chart I want to show you is the stock to flow. This is a common way to measure commodities like gold. The theory is, if all the gold in the world disappeared tomorrow, how long would it take to mine it all again at today's pace? Obviously, there's no quick fix. Bottom line, things that are difficult to replace are more valuable. This chart measures the scarcity of Bitcoin as the Bitcoin halvings reduce the rate of new coins every 4 years, shocking the supply and causing these 4-year cycles where demand and supply fight to equalize. Let's compare our current cycle to the previous cycle. In the previous cycle, it took 18 months to hit the peak price. In the current cycle, it took 19 months, very similar. In the previous cycle, it took another 12 months to fall from its peak to its lowest point. In the current cycle, we are just past 12 months, so we may be near the bottom. And this is not a price prediction, but it's just for comparison. In the previous cycle, the model had predicted a $6,000 price, and actually Bitcoin was closer to $10,000. So if this model were to be accurate for this cycle, it would be around $65,000 by 2024. That would be a 4x gain from here, and that's before the price shoots up after the halving. Again, not a prediction, but something to think about. Then we have the rainbow price chart. This tries to predict the highs and lows of each cycle based on a logarithmic curve. The yellow band is the nominal price, while red is the peak and blue is the low. There have been times that the price has broken beyond this model, but overall it's done a great job over the last 12 years. There's something important I want to point out on this graph. In March of 2020, the whole world shut down for COVID. It's rare for everything in the world to stop moving at the same time, and even then, the price barely kissed the bottom of this chart. We currently have a lower reading than when the world shut down. Some people may say a low reading is a bad sign, but I would argue differently. To me, it's a rubber band pulled back as tight as it can go. It's possible for the price to go lower, but I see a lot more upside than downside. Every investor wants to buy low and sell high, right? On to Bitcoin addresses. With Bitcoin's price falling for a year and so many exchanges going bankrupt, we've probably lost a lot of investors. But how many? 50%? 60%? Here's how many addresses we've lost during these tough times. Starting with the accounts that have at least one Bitcoin, we've actually gone up 23% in the last 3 years. And at the fastest rate this year. People are buying the lower prices. What about larger accounts with at least 10 Bitcoin? These are 6-figure accounts, and I'm sure they have better places to invest their money. Steady. Nobody abandoning ship here. How about accounts with at least 100 Bitcoin? These are accounts in the millions. Nope, holding strong. Finally, the market movers, the whales, accounts with at least 1,000 Bitcoin. These are accounts with tens of millions all the way up to billions of dollars. There it is, the downfall of Bitcoin. There's a 5% decrease, and that was probably the best 5%. I hope my sarcasm has settled in by now. There's nothing scary here, just a slow time with steady consolidation. The 1-year HODL wave chart shows how many Bitcoin haven't moved in more than a year. Despite the rough year, 2/3 of all Bitcoin hasn't moved. An increase from 2020, and the trend has been going up for 12 years. People who hold Bitcoin aren't being scared into selling. They're just sitting tight and giving their investment time to mature. And finally, we have the Bitcoin hash rate. This is the strength of the Bitcoin network. With every Bitcoin halving, miners are being paid less Bitcoin to process transactions. Prices have fallen far enough this year that we're near a break-even point. This is when some miners will be paying more money to mine Bitcoin than they're making in profit. There's been speculation that some miners will shut down or go bankrupt. This is possible, but we could lose half our current hash rate and still be higher than we were 3 years ago. And if we lose a couple miners, it just means there are fewer miners fighting over the same money. They would get a bigger slice of the pie, and it would actually help them. It's not the worst mining news we've seen. You may have noticed this dip. That was when the Chinese government banned all mining companies in China last year. At the time, they were the single largest mining country in the world. It caused a few months of trouble, but most of those companies simply picked up and moved to other countries, including the US, which is now the largest mining country in the world by far with a 35% share. We not only survived that dip, but actually excelled and are much higher today. As you can see, Bitcoin isn't dead. If you weren't around for 2018's crypto winter, this may seem scary, but it's just part of the cycle, and when things can't get worse, that means they can only get better. Be sure to check out my other videos, and thanks for watching.